Okay, so to everybody that's on with us, very, very good morning and very welcome. Again, we had a little bit of a quiet weekend because we had a little bit of a holiday here in the US, and I just said, you know what? Let's all chill out and take a little bit of a break. And we didn't really miss anything. Markets have started to move in the last several hours since the open, Sunday night. Uh, I think that is a good one, Bob. That's the cure all. Oh, that's great. So markets were moving a bit Sunday night. We've had a little bit of activity now, and we've definitely got some good things to talk about. But it was a pretty slow kind of all week last week was pretty slow. Not too much happened, but now we're starting to see things move around a little bit, and it's pretty exciting. Plus, I've got some pretty interesting perspectives I've been kind of looking over. I had some time to kind of uh, look over charts and kind of look at a few different things that we haven't totally dug into. And I think it's giving us a really clear picture of some big stuff that we have coming, and I'm pretty excited about that. So remember, anybody that's on with us for the first time or two, we'll do these live Monday and live Friday webinars every week, except for last week we didn't do a Friday webinar. But every week we'll do a Monday and a Friday webinar. And then throughout the week, remember, I'm going to update lots of charts, lots of details, lots of things are going to be coming through. So check Telegram. Make sure that you're part of the DayTraders FX alerts channel in Telegram. Everybody should be. If you're not, just send an email to support@DayTradersFX or find me on Telegram. My username's @JaredJohnson. Strange one, I know. So just make sure you're in there. And then the other place you can go is, remember, go to members.daytradersfx.com and you'll see all of this stuff over here. So we have our dashboard, and this is, the last webinar recording, all of our open and pending orders, our watch list. This watch list is from last week. I will obviously update this. I update this every week at the start of the week. So I'll update this, today and get some new charts up here and give you guys lots of good things to look at. But I really, really recommend you go to this watch list and try to kind of study these charts and make some mental notes. And I'll, of course, be posting pending orders and so on. But one thing to remember is, in this group, I will give lots of guidance. I'll give lots of very specific entries and exits. But what I post here in the watch list is always going to be important. The people that make the most money in the trade group are those that really study the watch list and do a little bit of their own trading on the watch from our watch list items, as well as all of our trade recommendations. So sometimes people say, I wouldn't mind a few more trades. And I say, well, go to the watch list, because these are things that, if you have more time and more ability to kind of catch some of these trades, the watch list is a great place to go and just do a little bit of trading in between the trading. We've got lots of active positions. We've got some pending orders, some filled orders. We got a lot of stuff in here. So that'll keep us busy. The one thing that we do want to be a little bit careful of is not having 20 trades running at once. And when I get into a trade, I usually want to get a semi-decent run out of it. So that's why we end up sitting in some of these trades a little bit longer, so that we can get a little bit bigger of a move and a little more profit out of that. So sometimes the trades really pile up. We have 3, 4, 5 trades with multiple positions each running. So do a little bit of watch list activity while we're trading some of the other bigger setups. Everyone good with that? Any questions, thoughts, comments, anything? If everyone feels good about all that. Again, the watch list, you can see this was last updated on the 25th of November, and here we are somehow on December 2nd. So this was all updated on just a week ago, and I will update it again. So these will all be some really, really good things that you can look at throughout the week, as well as, I'm posting updates multiple times per day, answering questions. I'm just here to make sure everyone's crystal clear on everything. All right. So next, we have quite the calendar this week. It's not an excessive amount of news. Some weeks we'll just have twice or 3 times this much news, and you have to just scroll through pages of news announcements, and it's kind of crazy. And that's kind of tough to trade, because then the market bounces and then waits for the next announcement and then runs, some direction. So we don't have a ton of news, but we do have a few significant announcements this week that are going to be pretty important. Numero uno, we've got a little bit of euro activity here. I think this is currently underway right now. Lagarde, I think, is speaking right this moment. We'll see what happens there. It shouldn't be too terribly crazy. But this is going to be interesting. In about 13 hours or so, and I say that because we have just 25 time zones in here. So in about 13 hours, we have Australian interest rate news. Oh, baby. So this is going to be a big one because we're watching and trading some Aussie pairs for sure. So we've got some Aussie CAD and Aussie Swiss, and we're definitely looking at some other Aussie pairs. So Australian interest rate news. This is one that, if you can be around your computer at this time, it'll be interesting to watch. And I will be updating and kind of posting some details and excited to add some to some of our Aussie trades if this spikes things down. So we're going to talk about this, but Aussie and interest rate news should be pretty big. They're expected to not change rates, so that leaves a lot of room for some volatility if they do change rates, if they cut rates, if they raise rates. A lot of room for potential activity there. The RBA statement is another big one right here, so that's going to definitely rock the markets a little bit. So we're watching a lot of Aussie pairs, and the Aussie news should be big. And then Tuesday, we've got a little more Aussie news, GDP numbers. Wednesday, remember, we have the ADP non-farm employment change report. This is always the Wednesday before our regular non-farm payroll. We don't care too much about this, really, at all. It gives us a little predictor of, usually how the regular non-farm payrolls look, but not too interested in that one. But I am very interested in this guy. So whammo, we got another one. We've got the Bank of Canada with interest rate news on Wednesday morning. So that'll be about 7 a.m., about 50 minutes later than current time right now. So 7 a.m. Pacific time, 10 a.m. Eastern, 3 p.m. UK. That's Canadian interest rate news. Again, expected to leave rates the same, leaving a lot of room for some hanky-panky here. So whenever there's an expected rate change, oftentimes they kind of go with that. But when there's an expected things are staying the same, there's really a lot of directions we can go with this. And so I wouldn't be surprised to see a little bit of wild activity around CAD pairs. And we're watching CAD pairs because, once again, we have an Aussie CAD trade that's in a little bit of profit that has filled recently. So that's going to be Wednesday morning. Thursday, we have OPEC meeting, and they're trying to plan how they can take down Tesla factories. I don't know what they're doing. Anyway, we got the OPEC meeting on Thursday. Shouldn't be too terribly wild. And, remember, we've got a little more news, Wednesday evening from Australia and New Zealand. Shouldn't be too wild. Trade balance and retail sales, not the biggest one. And then going into Friday, again, more activity. Canadian employment numbers, U.S. employment numbers. Wham, wham. We got some big ones. So pretty much every day, something pretty exciting is happening, except for probably Tuesday. So Monday, Aussie interest rates. Tuesday, GDP numbers. Wednesday, Canadian interest rate news. Thursday, oil city. Friday, U.S. and Canadian employment numbers. So it should be a pretty active week as far as what the charts are doing and how everything's looking. I'll be watching around all these news announcements, and I will be posting updates. So just keep an eye on Telegram for those of you that are a little more on the mobile side and you do a lot from your phone. I will be posting on the phone, and also those that are at the computer, just come over here and make sure you're in the DayTraders FX alerts and also in the DayTraders FX chat. And so this is where I'll post kind of one-way messages, and this is where you can, in the DayTraders FX chat, you can chat with me and other members and so on. So both good places to be. Make sure you're plugged in on both those. And if you have any questions or if you're not connected, please let me know. All right. Everyone feeling okay so far? Makes sense. Everyone with me on all that? Um, all right. So let's good. I hope you're well, James. I know you had a little bit of some eye treatment recently, so I hope everything's good there. Um, and you're on the mend. So good stuff. Good stuff. Excellent. Excellent. Okay, so where do we start? There's so much to talk about, and one of the big things I want to discuss, first of all, well, one of the medium things to discuss, we see a lot of New Zealand strength right now, this morning. Lots of New Zealand strength. We're seeing some Aussie strength. Swiss franc is ticking up just a little bit. Euro, and everything else is kind of on the downside. Lots of Canadian weakness. So clearly, whenever we can kind of put these two extremes together, New Zealand strength, CAD weakness, of course, we're seeing a big move on the New Zealand CAD, which we did have a pending order to get into, and it's kind of run away just a little bit, but that's okay because there's some important things to discuss here. So New Zealand CAD making a bit of a move, Aussie CAD making a bit of a move, Euro CAD making a bit of a move. But we're definitely seeing some activity happening there, and we're also seeing the Aussie New Zealand moving, right? So we're looking at strength and lesser strength, and those are moving pretty well. New Zealand Swiss is moving pretty well. Aussie Swiss is kind of a little stuck. We're seeing the Euro and the Swiss kind of neck and neck here, so we're going to look at some of that. But we've got some good things in the works. So here's what I want to talk about first and foremost this morning. And remember, guys, for anybody that's new, that's on with us for the first time or two or three, don't hesitate to type questions, comments, ask anything you can think of. Even if I'm in the middle of some spiel about something, just type in your questions and I will get to them. And there is no such thing. I really hope you guys believe me on this. There's no such thing as a bad question. The only kinds of questions I don't like are, why don't we do something that requires future telling? So those are the only questions, which all of trading kind of is, but I do get some questions. Why don't you buy the dip here and then sell the rally there and then buy it? And I always say, I don't know, because that's fake news. I don't know what it is, right? Fake news. Anyways, but all questions are good. I want to hear everything from everybody, so make sure to not be shy. Okay, so here's what we've got to understand. We've got to make sure that we have the big picture so that we can trade the short-term picture, right? And that is super important. I spent the weekend chatting with some trader friends, one of which runs a pretty massive hedge fund. And we had some really good discussions, and it's always fun to chat with some people that are 100 times smarter than me, and probably, according to a lot of people that know me, that's most of planet Earth. But when it's regards trading, it's always interesting to talk to people that really just know a ton. And so we always have some really great conversations. And one of them, I was talking about kind of my take on kind of the U.S. dollar, bonds, yields, S&P, the VIX. The webinar that we had where we talk about the risk on and the risk off markets, and it was really interesting to kind of compare some charts and discuss some of these things. One thing to kind of look at here is remember that the dollar, particularly the last, these lows are kind of beginning of 2018. So, we're coming up on 2 years of the dollar hitting this low here, and hitting this kind of real low level down in the 88.50s, and so that was very beginning of 2018, and it rocketed up from about April to May. Really big move up on the dollar, right? So we saw a lot of dollar strength, but then it's just continued to grind higher. And this is the thing that we have been talking about for months and months. Now, it's slow to develop, and that's, timing is sort of everything, but sometimes you just have to position yourself and you wait a day, a week, a month, a year, who knows? But it's been kind of a slow grind, right? And what this is telling us that the dollar index back here hit these lows almost 2 entire years ago, and it's just been grinding higher for 2 years. And what have we been talking about? We've been talking about the dollar sell-off. This is what we've been talking about pretty much for the last 6 months, the big dollar sell-off. Well, it's been interesting because the dollar has turned out to be, and this isn't always the case, right? We've seen the dollar go up and we've seen the S&P go up. And oftentimes we see the dollar as kind of a safe haven type currency, right? And I've talked about this. I talked about this in the webinar, how the dollar was really inversely correlated to stocks a couple years ago, right? If stocks were going up, the dollar was going down, right? People were saying, forget the dollar, I'm getting into stocks, and they're paying more money, everything's good, making the bucks. And if the stock market was going down, panic set in and everybody just bought dollars and bonds and all of that stuff. Well, it's been really interesting that we have had a pretty uptrending stock market along with a pretty uptrending US dollar. Can anyone see a little correlation there? What do you guys think of that? So if the dollar is kind of typically this safe haven currency, but now it's going up alongside the stock market, what do we think that means? What does anybody feel like that might mean? I'm curious. Any thoughts? Safe haven currency going up, stock market going up. Interesting. Craig, got to be selling something to buy dollars and stocks. Yes, that's part of it. Yes. And another part of it is that the one thing that we want to look for, how many times, hedging, Angie, that's a good one. How many times have we talked about the fact that whatever the masses are doing, whatever the news is saying, whatever we're hearing talked about a lot is garbage, right? How many times we've talked about that a ton, right? Where we say, okay, whatever the masses are doing, don't do. And so, so what we've had here is, number one, we've had a lot of investors and traders and so on. Mel, that's a good point. Interest rates may not fall again soon. That's definitely a good one. But the other thing that we've seen is that a lot of big money has missed that stock market rally. Remember, in the last 10 years, this bull market in the U.S. has had very, very minimal participation, right? It's just been going up, and everybody for 10 years since the market bottomed out in 2009, they've been saying, yeah, this isn't going to last. This isn't going to last. And of course, a lot of funds have made some good money on it, but the majority has been very, very suspicious of the rally. And so then, especially now, as we've seen this kind of area where it's been, it's reached kind of a fever pitch, right? Where we're saying, okay, the market's got to be topped out now, right? It's got to be topped out now. It cannot go higher. And then what has it done? It's gone higher and higher. Here's the S&P. It's just gone higher, right? Here's January 2008. We had that little sell-off, and then December 18, and here's December 2018. And it just continues to grind higher. So what that's telling us over here is that this right here is the pain trade, right? And this is a concept that we have got to internalize to death. This is something that we have to find as traders constantly. Where is the pain trade? Where is the trade that is so overcrowded because everybody thinks it's such a good idea? That's the one that we want to find. And that this has been staring us in the face, right? The US dollar has been grinding higher while the stock market's been grinding higher. Everybody's buying dollars, everybody's buying bonds and treasuries, and everybody's just going for the safe trade, while the risky markets have actually been doing just fine, right? The risk on markets have been doing fine, but we've had this really this really kind of let's let the markets do whatever they're going to do. Who cares? We're going for the safety, right? And that's what this US dollar chart has represented. And this thing is so stinking overcooked. We don't very often see 2 solid year trends on the dollar. Back in the day, it would make some, it would make some moves and so on. But, typically we get you know, we get a year's worth of up and a year's worth of down, and you know, long-term trends are definitely there, but these kind of shorter term trends like this guy right here, where we're talking, you know, January 2018, and here we are almost January 2020, 2 years of going up. The pain trade is the US dollar. The pain trade is bonds and government bonds, and the really safe, really low yielding investments, right? Everybody's scared. Everybody doesn't know what to do, what to think. So let's just go for the safe trade. Well, the problem that happens is when the safe trade gets overdone is when it tips over, right? We have seen, if we just look, I mean, we can see this on the we can see this on the dollar. I like looking at this on the euro dollar chart specifically, where we get these kinds of moves, right? You know, again, same kind of chart here. Here's, you know, January 2018, euro dollar's been downtrending for 2 years. And every time this thing looks like it's going to make a massive move, it always gives us a turn, right? And it's just going to continue going in whatever direction it's going to go. You know, we get these aggressive runs down on euro dollar, March 2014, you know, all the way to March 2015, big run down, and then it starts coming off those levels. And you know, and gives us a lot of garbage for a while, but there's big ups and downs, and then we get this big move, and you know, and here we are once again in this 2-year downtrend. So the dollar, and we've seen this happen across the board, right? Euro dollar has been in a 2-year downtrend. Aussie dollar, 2-year downtrend. Here's our Aussie dollar. We're creeping up on. Oh yeah, we're 2 years. Here's January 2018, 2-year downtrend. New Zealand dollar, where's our New Zealand dollar? There we go. New Zealand dollar has kind of had a little bit of a wild move here, but again, you know, the highs were all the way back here, mid 2017, you know, topped out again in that kind of January, February 2018, and they've been coming down. So we've seen this big dollar push for 2 years, and it is so overcrowded. You know, and the other thing that we can look at here, we can look at these bonds. Remember, this was the big sell-off. This was, if you look at the bonds right here, remember, these are kind of the things that are supposed to go opposite of the stock market. So we had, you know, we had the big sell-off in the stock market, right? Kind of that, down here. We saw October, November, the S&P kind of bottomed out here. Whoops, just a little bit. Here's our kind of, you know, the sell-off begins in kind of September, October, bottoms out in December, right? And then it starts to make this huge comeback, right? So end of December 2018, the S&P is up a ton, right? A ton. But what do we see bonds doing? We see them, you know, even though the stock market just rallied like crazy, bonds still went up, and yields still went down, right? So this is, you know, this is the big recovery in the stock market, and bonds and yields don't show us that same thing. Now, of course, with bonds and yields and so on, there is some foreign money that's coming from a negative interest rate environment and so on, that, you know, they're buying it up like crazy because of whatever the interest rates are for some of the various countries out there. But it's really interesting that the stock market rallies a ton and the bond market just goes straight up, right? That's everybody saying, screw this market. I'm going for pure safety. I'm going to be in dollars. I'm going to be in bonds. I'm going to be in treasuries. I'm just going to be going for the safe movement. That safe movement, if I had to call the next, you know, big wild crash, so to speak, I think it's probably going to be in the safety markets, right? It's going to be in the bond market. It's going to be in the dollar. I'm looking for such an aggressive dollar sell-off here that I think it's going to be mind-blowing. And we're already positioned for some of this dollar selling, but we are going to continue to build and build and build. And we're going to watch this safety trade, this bond trade, this dollar trade just come unglued, right? That's what we're looking for. We're looking for this thing to unwind. So, so that's kind of my perspective. How does everybody feel about that? Questions, thoughts, comments, and so on. Um, okay. Yep. Yep. Yeah, and it's true. It's true, Craig. Yep. And that's another thing, is as we get past some of the, some of the things that are really causing the market turmoil, Chinese trade agreement stuff and impeachment stuff, and once we get past a little bit of the, the real hot news headlines, that's just going to make this safety trade, this pain trade, even more painful. It's going to continue. People are just going to say, forget this. I'm just going to keep buying this thing. And this is the doom that we need. So this is kind of what I'm looking for. Does that make sense? Are you guys kind of seeing the correlation? Can you see what we're talking about here? This is that really kind of strange time where risk on and risk off markets are kind of happening together, which is really strange, right? So risk on and risk off. So we've had, dollar bonds and so on heading higher while the stock market's heading higher, and somebody's going to be wrong eventually. And we'll see. Is it going to be stocks? Is it going to be, the safe haven? And I'm betting on the safe haven 100% that this is going to come undone. So that's what we want to see there. Since you bring up safe haven, does this change what the Swiss franc does if the dollar crashes? No. So the Swiss franc will still be reacting to just good old volatility, right? It's going to be reacting to that volatility. So, as we see the VIX, for example, the VIX has kind of made this little skip up. We've been talking about this level quite a bit, and we've seen the VIX come off that level just a hair. And it's, we've had a couple of positive days. So as that's kind of happening, we're seeing a lot of Swiss franc movement. If we look over here at the New Zealand Swiss, and you can see that New Zealand's taken kind of this big run. And it's had a lot of strength here. We've had a lot of interesting things going on. One second, guys. 1 second. Yes, risk off should win this year, especially summer and after the election. Yes, and I think so. And of course, we're going to have that side of things as well, right? We're going to have that side of things where the election's going to be a big moment of uncertainty. That's going to be a big moment of uncertainty. So there's going to be some more risk off happening there. But I think the pressure is going to boil over. We've got elections an entire year from now, and markets cannot just continue to bubble for another year. It's already been a couple of years, right? We've had this kind of 2-year, let's just go risk off while everything else continues running higher. Excuse me. And so, I think that this has to happen before elections, that we've got to get that big safety trade, that big pain trade expressed in the market. So I'm pretty looking forward to that. Okay, so yes, and we're still going to be looking, and this is where it's going to be interesting. If we get a spike in volatility, we're still going to see reactions on Swiss franc. We've got so much New Zealand strength right now. Remember, going over here, we've got, the New Zealand is the strongest one today. So even though we've seen an uptick in volatility, the New Zealand Swiss is saying, don't care, still running higher. But we've seen a little bit in the Aussie Swiss, right? This is, the Australian dollar is a little weaker. And so we're seeing a little bit of downward movement there. We're also seeing that, we've got some euro weakness, and we're seeing that Swiss franc, taking charge a little bit. Dollar Swiss even, where's the dollar Swiss? There we go. Dollar Swiss, because we're starting to see some of that US dollar weakness as well. This is really pushing down also. So we're still seeing a good relationship with the Swiss franc and volatility. The thing we're going to have to watch is the Japanese yen and the stock market, right? So if we get an uptick in volatility, but somehow we see the stock market hold somewhat steady, then that's going to be a little bit of an interesting move for the yen. We could still see some yen weakness with a higher volatility environment, as long as the stock market can kind of hang in there. Everyone good with that? Does that answer questions? That make sense? So now that we've got kind of this big picture of, okay, it's time to kind of start with this whole thing. If if we were big stock and bond traders, we would probably be shorting bonds as well. You could short TLT here, and it might be that the whole thing. I shorted TLT at 138. Maybe it went up to 148, but eventually it went down to 120 or something, right? So we're going to be looking at all this, and we're kind of going to be formulating our trades around that. Now, I was a little early on some of these, right? So euro dollar, we got long euro dollar, and we've been sitting in that euro dollar in some drawdown for some months. But the euro dollar to me is going to be one of the best trades. This is the forgotten currency, the euro, right? The euro what? What's the euro? This is totally the forgotten currency. And nobody's talking about it. Nobody cares about the euro at all. And all anybody wants to do is get into dollar strength and get into safety. We're long euro dollar, and I think that this is going to be a massive trade, like a really excellent trade. So the only thing we're looking for on euro dollar right now is just, areas to add, really good areas to add, right? That's what we want to find, is really, really good areas to add. We still have this market imbalance down here on euro dollar that hasn't been hit at 109.65. I wouldn't be surprised. I'm not saying that we're going to get the big move today, right? Or it could be after the beginning of the year, and it probably will be. I wouldn't hate to see the euro dollar double bottom down here around 109.00. That could be pretty fantastic and pretty awesome. But regardless, I think we're going to get this euro dollar very, very easily up into the 116, 117s, like super easily. And it's probably, all this time we've been sitting in this euro dollar, months and months, it's probably going to happen in a very, very, very short period of time, 2 weeks, 3 weeks kind of a thing, that it goes from 110 to 117. So I'm pretty excited about that. I'm as dedicated to this trade as ever. When the euro moves, we had, look at this movement over here. January 2018, this is where the dollar said, okay, that's as low as we want to go. Everyone's buying dollars like crazy. But the euro kind of just went sideways, right? From January to about April, 4 months of nothing. And then from April, kind of mid-April to mid-May, about a month and a half, the euro went from about 124 to about 115. So it went, nearly 1,000 pips in a month, right? So the euro does do that, and then it's just been grinding lower forever. But to get this up 1,000 pips could happen very, very quickly. So I love the euro dollar trade that we're in. And I want to very much position us as much as possible into all of these dollar pairs. I really want to be long euro dollar like we are, and add some more positions to that. Our New Zealand dollar trade is giving us a little bit of grief. We've had a pending order on this New Zealand dollar at 63.50, and it just keeps running away like a son of a gun. But I'm not too discouraged here, because we're still, I think, going to have a good opportunity to get in on some dips on this New Zealand dollar. We still have a really, really solid, let me go to this 4-hour chart here. We still have a really solid market imbalance down here, and a really solid market imbalance right here. And debatable if that's a hit weekly pivot or not. Some charts will show it as yes, and some charts will show it as no. And then we've got a monthly pivot and a weekly pivot and a daily pivot, and we probably have some more market imbalance activity kind of running through here. So New Zealand dollar is getting a little overcooked right now, and I think we're going to have plenty of opportunity to buy into that on a dip. Now we might need to, we had an entry at 6,300. We moved it up to 6,350, and we're just missing it. We're just barely missing it, but I think we're still going to get there. Now, New Zealand dollar has kind of run up, and it's just hit this this weekly pivot over here that was missed. We've got this big market imbalance over here at 65 and change. But, you know, lots and lots of big targets over here. 6,600 and, you know, 6,700 and lots of big targets over there in kind of that recent movement. But if we go to kind of this daily chart, we have an incredible amount of missed targets all through this over here, right? So all between, you know, the kind of mid to low 70s, all the way up to kind of the 8,000s and mid 8,000s. So there's lots of opportunity here. You can see this New Zealand dollar, big double bottom, and we're going to get a little more aggressive here if we need to, but it's holding very nicely, and we're just looking for the best entry possible to buy into that dip. But I very much like being short US dollar. And as I've said, you know, for months probably, the best charts and best trades right now are New Zealand and Aussie pairs, in my opinion, and shorting the dollar. So that's kind of what we're looking for. So we're trying to, you know, I'm watching this closely, and you know, we may need to raise our first entry to 6,400, and that might be just a nice little easy starting point on this New Zealand dollar. But we're gonna work our way into it. So hang in there, be patient, and we'll get a nice little trade. Regarding the Aussie dollar, and kind of just staying on the dollar topic here for just a moment. Same thing, you know, it's coming off these lows, it's coming off these levels, some market imbalances down here and so on. Aussie dollar's got some nice upper targets, specifically this monthly pivot up here around 68 and change. So we're just kind of looking for this Aussie dollar to say, you know, that's as low as I'm going to go. That's it, right? That was a big market imbalance right there. It hit and held pretty nicely. So I like that area. I like that 67, kind of 50, 60 zone, and 6,700. So we're definitely watching all this. Things are still kind of slow moving. We're not getting a ton of follow through. So that's why I'm not thinking that we've missed too many opportunities here. There's some short-term trades for sure, but the bigger moves, which I'm much more interested in getting into, I think will be just fine. Okay, everybody good? Everybody good on that? So that's dollar stuff. We do have some pending orders here. We've got New Zealand. We've got our New Zealand CAD pending order 84.35, and New Zealand CAD has really kind of taken off the last little bit. It was consolidating all through this area here, 8,500. And that's why I was thinking, yeah, we can get back down into this little market imbalance, into this little zone here. But then we had this kind of big aggressive run here. So now we're all the way up above 86. So, you know, it's almost 200 pips away from that entry. I'm going to watch this pretty closely and kind of just see how this goes and how this plays out. But we've got 1, 2 consecutive missed weekly pivot points and a monthly pivot point and a big market imbalance down here. I'm definitely not going to chase the New Zealand CAD. So I'm going to watch this with some of the Canadian interest rate news and some of the Canadian employment numbers, and see if we can get some dips to buy into this New Zealand CAD. So got a lot of missed stuff down there. I think we should be fine to wait on this and get a little bit of a lower entry. New Zealand Swiss, 6,300. Did we talk about New Zealand? Yeah, so same kind of thing. New Zealand Swiss made this run higher because we've got just endless New Zealand strength right now. But again, 2 consecutive missed weekly pivots, a monthly pivot. We've got some market imbalances lurking down through here. We've got a gap. We've got all kinds of things. So I think we're going to be able to get some nice pullback on New Zealand Swiss. Now our entry here is 6,300, our pending order. I'll probably raise that up a little bit. I think we can probably go with like a 6,350 as well on this New Zealand Swiss. It's running up. It's hitting some of these upper areas. We've got, you know, a weekly pivot over here that it's just about hit. We've got a big market imbalance over here, 65.15, monthly pivot, weekly pivot, all up in the 66s and creeping up into 67. So we're just looking for a little bit of a dip there, and that's why I've got that pending order. Again, I'm probably going to raise that up at least 50 pips. We're going to raise this up a little bit, and we're probably going to raise this guy up a little bit. We don't want to miss New Zealand pairs running because these are the trades we've been waiting for, but at the same time, we're definitely not going to chase them. So we'll adjust our entries a little bit happily. But I think we've got some good opportunity to get in on those pullbacks. Angie, how much further do I think it'll go up regarding the New Zealand Swiss? Is that what you're talking about? So, oh, you're in did a bit of scalping, selling down now, and a little bit of drawdown. Okay, gotcha. Um, I don't know how much further it's going to go up. Maybe it's headed into some of these targets now. And so I don't know how far we're going to see this thing go, but I do know that we've got some signs of pretty overextended markets here. So I think those weekly and monthly pivots right through that area should be pretty responsive to the market should be pretty responsive to those levels. So I would think that this is going to come down to some degree sooner than later. Give you a chance to get out with hopefully a little bit of profit. Give us a chance to get out with or to get in long. So yep, yeah, hang in there, but manage your risk as always. So very interested, New Zealand dollar, New Zealand CAD, New Zealand Swiss, all these guys through here. Aussie pairs, same thing. We've got an Aussie CAD trade. Remember, we got into this guy at 90.10. It's filled, it's open, it's running. And this is up at about 90.40, just shy of 90.40 right now. And again, we've got two big Canadian interest or Canadian news events this week. So interest rates and employment numbers. So this could get a little wild and a little bit crazy, but I really love this setup. That's a great bottoming out pattern, great trend line break. Everything's looking really good. We've got some really high probability targets here. So we're just going to hang on to this Aussie CAD as long as possible. If some of the Aussie news drives this down, we'll buy it again. If some of the CAD news drives it down, we'll buy it again. But I want to stay long Aussie CAD as best as we can. So really like this setup, and I'm definitely looking for a couple hundred pips of upside potential here. So excuse me. So that's Aussie CAD, Aussie Swiss. Again, I like this Aussie Swiss. I just want to get we're in the Aussie Swiss. I just want to get one more stab lower. This is what the Aussie Swiss does. It kind of just sits and sits and sits, and then as soon as you do something, it does the opposite kind of a thing. So I'm just kind of watching this area, and I'm saying, hang in there. Let's get that breakout and that move down into the 66s, 66.50 area, and then let's trade this higher. That's what I want. That's what I need to add to this Aussie Swiss. So with a possible uptick in volatility this week, we could see some more Swiss franc strength. And with some of the Aussie news that we have this week, we could see some Aussie weakness. Both would be great for us getting into these trades. So Aussie Swiss looks awesome. Aussie yen's kind of hanging in there as well. I'm not super gung ho to do a lot of trading on the Aussie yen, but I do like this pattern, and I do think coming off this 10-year support is probably a great idea, right? And again, if the stock market continues to crank higher, the Aussie yen will likely break this neckline and just run right on up, and we should pretty easily be able to get into those 8,000s on the Aussie yen. So I like that one. So getting some nice dips, buying into that Aussie dollar is awesome. We've got a nice dip on this Aussie New Zealand, which is just so great. I can't express how excited I am about this whole thing. We've seen the Aussie New Zealand just running up, and now it's coming down nice and crazy. And this is going to give us some great opportunities to buy in on some big dips here. Currently, we have 3 missed consecutive weekly pivot points. That alone is enough reason to just say, yep, I'm going to get into this thing. But we've got 3 consecutive missed weekly pivot points, a missed monthly pivot, a big market imbalance up here. Oh, man, I love this trade so much. We've talked about this thing, pretty endlessly. While it's on this big move here, and just leaving market imbalances galore and so on, and all these missed pivots, I want to see if we can get down just a hair lower, right? Let's get this thing down we've got, you know, we've got this big weekly pivot down here at about 104.25. That's only another 50 pips. Let's get it down to that, and then let's just start buying the heck out of this thing. So down into the 104s, we'll just start scaling into this Aussie New Zealand and just go for it. We could see it run down to 102.50, 60, 70 area. That's so great. I'm so okay with that. We'll just let this come down, start taking out some of these levels, and buy into this as we, you know, remember Aussie New Zealand kind of does this, right? We had one little dip lower in 2015, and otherwise it hits 102.75 and bounces off it, and that's kind of our big sideways channel. So I'm super excited about getting a nice little trade going on there. You can see the Aussie New Zealand's getting pretty overcooked here. We're 4 consecutive bearish weekly candles. It's been going down for 4 solid weeks. And on the daily chart, we only have 2 little daily bullish candles in there in the last probably 20 bearish candles. So I love this. I think this is a great trade, and I think buying any kind of dips on this will be perfect. Let's get this down into the lower 10400s, and then we'll just pile into this thing and go for it. So I'm real excited about this one. So Aussie New Zealand looks really good. Euro pairs, we've got some things we're looking at on Euro pairs. I'm still interested in getting I'm still interested in getting short Euro Aussie, and we'll keep an eye on this. We've got, you know, monthly pivot, weekly pivot, big market imbalance. We've got some really good targets down below, and this looks like it's holding the 6,300, 63 kind of 25 area pretty well. So I think any little rallies here could give us a nice opportunity to trade some Aussie strength against some Euro, you know, some short-term Euro weakness. So I think that should be a good trade. Euro CAD's up a bunch because we've had the, you know, we've seen a lot of CAD weakness. Did we have a pending order on Euro CAD? I don't think we did. But I like this Euro CAD. We've talked about this one quite a bit. Again, nice bottoming out pattern and some really, really good upper targets here. Plus, we're coming off of a 2-year double bottom, which is always good. So really good support, really good bottoming out pattern right there. I think this is a great opportunity to trade this Euro CAD higher. It just hit that weekly pivot. We've got a big market imbalance and some daily pivots up here. Let's see if this thing pulls back, and we'll be looking for some opportunities to buy into that. Euro Swiss, same thing. Let's get this Euro Swiss down there. Let's get it down into the 10, you know, below 109 ideally would be great. If we can get this below 109, then we'll be buying into this thing. So we need to see it drop about 100 pips. I don't really want to trade it otherwise. I don't think there's really even any good scalping opportunities here. It's just such a sideways chopper. But when it dips down, then it rallies like crazy. So we get this down into the 109 and below 109, and that should be a great trade for us. Okay, guys, those are kind of the main guys that we're looking for right now. We're trading the heck out of dollar pairs, and we're trading the heck out of Aussie pairs and New Zealand pairs. I will get this watch list updated with all the charts and all the details, and I will be posting updates multiple times per day, but we'll get this watch list all updated. We'll get some of these entries changed, like New Zealand dollar, New Zealand CAD, New Zealand Swiss entries. We're probably going to raise those up just a little bit. So keep an eye on that. I'll have it all done as the morning goes on. So I'll keep you guys posted there. And then we've got a lot of big news this week that should get things going. So I'm pretty excited about that. Okay, questions, comments? What do you guys think about that? Everyone good? Any thoughts? Any specific currency pair you want to look at? That's kind of the big picture that we're looking for. I'll look for some, you know, now that we're getting a little bit of push and a little bit of volatility, we'll look for maybe some slightly shorter term trades this week, something that we might only stay in for a day or 2 or 3, you know, try to grab 50, 60, 70 pips out of a few little setups here and there if we get them. But for the most part, I think we've got our big picture very much lined up for us, and I am super excited about this. Okay, thoughts, questions, comments? You guys good with that? Anything before we wrap it up this morning? Everyone good? I don't want to leave anybody hanging. There will be nobody left hanging. Good. Yes. Yes, some good stuff is in the works, James. Absolutely. Good, Sim. Good, Sim. Good to see you, my friend. Yeah, we have been, very specifically, we've been the most patient with this dollar trade, and I think our moment is very close here. So we've been real patient with, being short the dollar and just kind of watching it grind higher, grind higher. But I think this thing's going to explode lower in a massive way, and we'll be positioned for that. We'll be, really nicely, really well positioned for that. So looking forward to that. Okay, guys, that's it for me then. Any thoughts, questions, comments, I will be happy to address. And otherwise, we'll see you in the chat. Remember, if you're not part of the DayTraders FX chat or DayTraders FX alerts, just send a message to support@daytradersfx.com and we will get you hooked up there. Pretty excited about all that. Okay, Angie been off a little bit due to fires, but nice to be back. Listen regularly again. Good. I hope everything's good out there, Angie. I know Australia got pretty hammered by fires. I'm a Californian, and that's pretty much our it's a yearly occurrence. So we know how that goes. So I hope you guys are good out there, and I hope everything's under control. Those fires are terrible. They're terrible. So good for you being out there helping out and doing everything you can. Good. Glad it's on the mend. All right, thanks, guys. Good to see everybody. I'll get this recording posted along with a lot of charts and updates and details, and we'll be good to go. Yeah, rain is quite helpful in those situations, that's for sure. Hopefully you guys are getting a bit of it now. Okay, take care, guys. We will, lots of updates coming as the morning goes on. Thanks, everyone. Take care. We'll see you soon.